Every country on earth is drowning in debt. The United States, Europe, Japan, China, every single one. But almost nobody ever stops to ask the one question that shatters the entire illusion. If every nation on the planet owes astronomical sums of money, who exactly did they borrow it from? Who is the creditor? That single question is why this video exists. Because once you understand how the global debt machine really works, you'll realize that everything you thought you knew about government finance, national deficits, and bankruptcy is completely, utterly wrong. Today, we're going deeper than politics, deeper than news headlines, deeper than the economic cliches you hear on TV. We are going straight into the hidden machinery that keeps the modern world running. And I guarantee you, by the time we're done, you will never look at money, debt, or government spending the same way again. Before we dive in, make sure you subscribe and hit that notification bell, because what you're about to learn is something that genuinely shocks people who have studied economics for years. Let's start with the numbers, which are frankly absurd. The United States owes over $38 trillion. Europe owes $14 trillion. Japan owes $9 trillion. All in all, total global debt has smashed through $315 trillion. That's more than 3 times the size of the entire world economy. If these were household numbers, every country on earth would have been bankrupt decades ago. Imagine owing 3 times your annual salary. Your creditors would be calling non-stop. You'd lose your house, your car, everything. But governments don't collapse just because a number on a screen gets bigger. They don't get their electricity shut off. Instead, they just keep borrowing, endlessly. They roll over old debt into new debt, like a credit card balance that never gets paid down, but somehow the bank just keeps raising the credit limit. How is this possible? The key to this entire puzzle is understanding that government debt is not like your personal debt. It operates on a completely different set of rules. A government that controls its own currency, like the United States or Japan, can't run out of money in the same way you can't run out of points in a video game you designed yourself. They can always, in theory, create more. So why do they borrow at all? If they can create money, why issue bonds and go into debt? This is the first major plot twist. Governments issue bonds not primarily because they need to raise money to spend. They issue bonds because the debt itself is the bedrock, the fundamental building block of the entire modern financial system. Government debt is the ultimate safe asset, the financial backbone that every pension fund, every insurance company, every commercial bank, and every central bank on the planet relies on to function. This is where most people's minds get completely blown. So who is the creditor? Is it some secret billionaire in a shadowy room? Is it a mysterious global lender that everyone owes money to? The answer is far stranger and far more public than any conspiracy theory. The biggest creditor of the United States government is the United States itself. It's not a foreign power. It's not a secret cabal. Over 70% of all U.S. debt is owned by American entities. We're talking about pension funds managing your retirement savings, the Social Security Trust Fund, commercial banks where you keep your checking account, mutual funds in your 401k, and, of course, the U.S. Federal Reserve. When you hear people say things like, China owns America, they are missing the forest for the trees. Yes, China holds some U.S. debt, but it's a relatively small fraction. And why do they hold it? Because they sell trillions of dollars worth of goods to America, and they need a safe, stable place to park the dollars they earn from those sales. U.S. government bonds are, for all intents and purposes, the world's safest financial parking lot. But let's get to the real heart of the system. The thing that changes everything. Government debt is the world's savings account. Think about it. Where do you put large sums of money if you want to keep it safe and earn a little bit of interest? For giant corporations, foreign governments, and massive investment funds, the answer is sovereign bonds, especially U.S. Treasury bonds. They are considered the safest investment on earth for one simple reason. The government that issues them can always create the currency needed to pay the interest. This is why the risk of a country like the U.S. defaulting on its debt is practically zero. The real risk isn't default. The real risk is inflation. If the government creates too much new money to pay its debts, the value of that currency goes down. Your dollars buy less. That's the real danger, not a national bankruptcy. And now for the final twist, the one that almost nobody knew before watching this video. Modern economies have cleverly and perhaps dangerously turned debt into money itself. When the U.S. government issues a $1 million treasury bond, a bank can buy it. That bond is now an asset on the bank's balance sheet. It is treated as if it's as good as cash. The bank can then use that bond as collateral to borrow money from the central bank, which in turn creates new digital currency in the process. Your bank deposits? They don't just sit in a vault. They exist because the entire banking system is built on a mountain of these government bonds. Without trillions in sovereign debt, there would be no modern banking, no credit markets, and no safe assets to anchor global trade. The system would freeze. So, when we ask that original question again, Who is the creditor? The answer is mind-bending. The creditor is not a specific country, not a wealthy family, not a hidden elite. The creditor is the entire financial ecosystem. The creditor is us. It's our pension funds, our bank accounts, our insurance policies. The entire system is designed to depend on governments promising to pay interest forever. And this is why governments are never ever expected to actually repay the principal on their debt. In fact, trying to pay it all off would be catastrophic. It would be like pulling the foundation out from under a skyscraper. Paying off the national debt would mean eliminating all those bonds that banks, corporations, and investors rely on. It would destroy the asset that underpins the entire global financial system, causing a liquidity crisis so massive it would make 2008 look like a minor hiccup. It would literally shut down the mechanism that creates and moves money around the world. So the next time you hear a politician talking about paying off the national debt, you'll know that they either don't understand how the system works, or they're not telling you the whole truth. We live in a world where debt has become the engine of wealth, and where borrowing isn't a sign of weakness but a requirement for the system's survival. It's a machine designed to run forever, perpetually borrowing from the future to finance the present. The question isn't whether it will stop, but what happens when the fuel, global confidence, finally runs out. Thanks for sticking with me through that. I know it's a lot to take in. If this blew your mind, share this video with someone who needs to see it. Drop your thoughts and questions in the comments below. I read as many as I can. Ever wondered who the world's biggest creditor is? Who does America, Japan, and all of Europe actually owe trillions of dollars to? The answer is going to completely change how you see money, power, and the entire global economy. To find it, we first need to break the spell that the word debt has on us. We're taught to think of debt as a terrible burden, a sign of failure. But what if I told you that in the world of modern finance, government debt isn't a burden at all? It's the raw material from which money itself is created. Think about it. When a government, like the United States, issues a bond, it's not just borrowing money, it's creating a brand new financial asset for someone else. That bond is an IOU, a promise to pay back money in the future, with interest. And these IOUs are everywhere. Your retirement fund? It's almost certainly packed with government bonds, the safest assets your bank holds to protect your deposits. You guessed it, bonds. The massive pool of liquidity that allows global trade to happen every single day. It's all backed by the stability of these government bonds. Even the US dollar, the world's reserve currency, rests on the foundation of US government debt. Now, here's the part that flips everything you learned in economics class on its head. Governments that create their own currency don't borrow because they're out of money. They're the source of the money. They borrow to create and inject more money into the financial system. This is the fundamental reason why countries like the US or Japan have absolutely no intention of ever paying off their national debt, because the debt is the system. America didn't become the world's dominant economic power by eliminating its debt. It became powerful precisely because it created the world's most trusted IOUs. These IOUs, known as US Treasury bonds, became the global gold standard of safety. After World War II, the entire world needed a safe place to park their cash, an asset that was as good as gold but more flexible. US Treasuries filled that role perfectly. Today, every major country, every global bank, every large corporation, and every international financial institution holds US Treasury bonds. They don't do this because they're forced to. They do it because these bonds are considered the ultimate risk-free store of value. When the world gets scary, everyone runs to the safety of US debt. It's the financial bedrock. So when you hear that Japan owes over $9 trillion, or that European countries owe a combined $14 trillion, who are the creditors? It's not one giant, mysterious entity. The creditor is a vast, interconnected network. It's millions of ordinary people through their pension funds. It's insurance companies. It's corporate treasuries with extra cash. It's foreign governments like China and Saudi Arabia managing their foreign exchange reserves. It's central banks all around the world. They are all holding each other's promises. It's a complex web of mutual obligations that keeps money flowing and the global economic machine humming. But here's the truly mind-blowing twist. If you look at the data, you'll notice a strange pattern. The more economically advanced and stable a country is, the more debt it tends to carry. Why would that be? It's because sovereign debt has become the oxygen of modern finance. Without a deep, liquid market for government bonds, the whole system would seize up. Think about what would happen. Without government debt, banks would lose their primary source of safe collateral, making it much harder and riskier for them to lend money to you and me. Global investors wouldn't have a benchmark risk-free asset to build their portfolios around. The value of currencies would become much more volatile because they wouldn't have a solid anchor. And most importantly, central banks, like the Federal Reserve, would lose their primary tool for managing the economy. Central banks control interest rates, fight inflation, and provide liquidity during crises mainly by buying and selling government bonds. This process is called open market operations. If there were no bonds to buy or sell, they'd be powerless. In other words, the world runs on government debt because that debt has become the ultimate anchor of trust and stability in our financial architecture. So let's go back to our original question. Who is the ultimate creditor? It's not China, it's not the International Monetary Fund, and it's definitely not some shadowy group of global elites pulling strings behind a curtain. The ultimate creditor is the system itself. It's a financial structure built on an endless cycle of promises, a cycle that survives only as long as we all have confidence in it. Let's break down how this cycle works. First, central banks essentially manufacture debt into existence when they buy government bonds. They create new money out of thin air and swap it for these government IOUs. Second, commercial banks use those same government bonds as top-tier collateral. This allows them to create many more times that amount in new loans for businesses and consumers, a process known as fractional reserve banking. Third, investors all over the world treat these bonds as the safest asset on the planet, the 0 point of financial risk. And finally, governments complete the circle by continuously rolling over their debt. They don't pay off old bonds with tax revenue. They just issue new bonds to pay off the old ones, perpetually renewing the promise. Imagine the entire global financial system as a giant spinning circle of IOUs. Each IOU is backed by the belief that governments will keep issuing new debt, not paying off the old debt. This might sound fragile, but it's what holds everything together. Here's the biggest irony of all. If governments around the world suddenly decided to be responsible and tried to repay all their debts, the global economy wouldn't be saved. It would instantly collapse. A world without sovereign debt would be a world with no safe assets left. No high-quality collateral for the banking system, no stable anchor for global currencies, and no mechanism for central banks to prevent financial panics or manage economic growth. The stability of our modern world depends entirely on the existence of debts that will never ever be repaid in the way we think of household debt. The creditor isn't a person or a nation. The creditor is a structure, a brilliant if slightly terrifying financial architecture that masterfully transformed the concept of debt into the foundation of money and trust. Once you truly understand this, you can see why economists don't panic about budget deficits in the same way the public and politicians do. The conversation among experts isn't, oh no, how will the government ever pay this back? That's the wrong question. The real multi-trillion-dollar question is, can the world maintain confidence in these promises? As long as the answer is yes, the system keeps humming. That confidence is the real battlefield of modern economics. It's a battle fought not with armies, but with interest rates, monetary policy, and political stability. Now that you've seen behind the curtain, you'll never hear the words debt and deficit the same way again. Thanks for watching, and if this blew your mind, be sure to like and subscribe for more deep dives into how the world really works.